Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, September 12th, 2023. Before I click through all the charts, I just want to encourage you to please click like if you haven't already, share the content with friends and colleagues, become a Wicked Stocks YouTube channel subscriber, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report, daily analysis in the SPY, that is the S&P 500 ETF, the Triple Q, that is the NASDAQ 100 ETF, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks a week, 8 a month that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for 20% moves or more on those underlying stock picks. We also offer a 5-day free trial up front. So if you sign up for wickedstocks.com, you can check out everything that I mentioned and then some. And if you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. So let's jump to the charts, start with the big picture, work our way into the day itself. This channel structure, 168.16 that we settled above in early May, set off a long-term show of strength that is eventually expected to yield the 226.70 long-term channel top. It's just that in the interim, we've had some meaningful, wild swings. Last week especially, gapping lower, breaking a speed line, placing the 168.16 area in reach again. We have yet to test it, but it is attainable over the next few weeks below 181.76. 181.76 is a 50% upside retracement over the last week of trade. It does close the gap that occurred on the way down, and I do think if we close above 181.76, this market should drift higher to 190.65 within a couple of weeks of doing so, possibly less. On the way up, we've got 187.61 right about here, which is a 5/8 upside Fibonacci over the last week. But I do think it is 181.76 that, if settled above, likely marks a good September low. And over the following week or two, we should test 190.65, which is a meaningful channel resistance, able to contain weekly buying pressures when tested, possibly on a monthly basis. And if settled above, should mark a good low, I'm going to say, through the rest of the year. So closing above 190.65, the 209.30 formation in reach, quite possibly over the following 3 to 5 weeks, where we can top out on a monthly, possibly quarterly basis. And that is the big picture in a nutshell. Closing above 181.76, good September low, 190.65, a 1 to 2 week target where we can top out on a weekly basis, possibly through September and fall off again. You never really know with these structures. They are, if you're like a 3 to 5 day out to a 3 to 5 week swing trader, 190.65 is valid on both counts. And closing above 190.65, 3 to 5 day swing traders go long and stay long up to 209.30. That is the big picture. But 181.76 is our pivot point, not only into later week, but even into later month. And for the day itself, I'll show this upside, 180.30, nothing more than Monday's high. If we push above Monday's high, we should, within the day, test 181.76, where we can place a daily high. And we could fall off from here into later week. It is a meaningful pivot point, but I just want to keep it as session containment, but I will underscore its importance as we move through the rest of the week. Downside today, if we break or open below, I've got 177.34 that is not marked, but it is a downside 3/8. Oh, actually, I take that back. It is actually Monday's low. There's all kinds of things going on here in the 177 handle, by the way. There is a downside 3/8 Fibonacci, 177 and change. You've got, I could go on, but we're using 177.34, the downside 3/8, able to contain intraday weakness. If we break 177.34, 176.12 is likely today. That is a downside 5/8 Fibonacci over the last 3 days. It may well contain daily selling pressures. If we close below 176.12, we have a 2 to 3 day sell signal down to 171.96, where we can place a daily low. That is to say, double bottom for a day, possibly double bottom for a week. By that point in time, we'd be closing in on this long-term support. And once again, I'm going to go back to this chart and say that holding below 181.76, closing this gap, we can fall off again. We can fall off potentially back into the upper 160s within several weeks of testing 181.76. I will remind you, if you recall, that on the way down, there was a 2/3 speed line that we closed above about a week and a half ago, and we broke back below it last week. That was a failure to follow through on a meaningful buy signal, as you recall, and that in itself indicated the upper 160s. So I still expect the upper 160s, and I'll just will remind you that it is such a long-term support area that oftentimes the markets have trouble testing them because there are so many resting bids that precede it that you don't actually test it. But I will say, holding below 181.76 will keep that area in reach. And, the 168.16 long-term channel top I showed earlier correlates well presently still with a descending channel bottom at 167.46. So let me just say that if we close below 176.12, we may, by the end of next week, continue into the upper 160s, where we can bottom out through the rest of the year, and above which a longer-term bullish dynamic remains in play for Apple, despite everything we've seen over the last month and a half in terms of giving back so much of that preciously gained upside activity as we move through May into July. We've given much of it back. And it can be reclaimed, though, and reclaimed quickly if we were to close over the next couple of weeks above 190.65. I hope this has all made good sense to you. I will just sort of rephrase that if we close above 181.76, no good reason to be short this market if your time horizon is anywhere from 3 to 5 days out to 1 to 2 weeks, because 190.65 would be expected. Until then, holding below 181.76 will keep this area in reach, the upper 160s in reach. It's just that it's fairly stair-step right now. 176.12, then 171.96. All are good day trade levels. You could even call 176.12 perhaps a 3 to 5 day swing trade. We could come off of here back to 181.76 as we move into later week. We could trade inside this zone through the rest of the week perhaps, though closing below 176.12 signals 171.96. Closing below 171.96 signals the 167.46 to 168.16 region. I do think 168.16 is attainable over the next several weeks, below 181.76, but like I said, it's such an important area. You're going to have bottom pickers all the way down. And so I'm just going to leave it at that. There's not much else to say. I will summarize the day: 180.30 upside, 177.34 downside. We could trade inside this area for a good part of the day, pushing or opening above 180.30 signals 181.76, able to contain session strength, breaking or opening below 177.34 signals 176.12, able to contain session weakness. I'm going to leave it at that for Tuesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.